It hit the bullseye. Did exactly what I wanted them to do and what I thought is best to do. I think one thing that people are forgetting is that we have a huge fiscal stimulus as a result of the reduction in the tax laws and $800 billion to $1 trillion deficits. So we don't need any more monetary stimulus. We have to get to neutral, and because we don't want the monetary stimulus to continue to inflate asset prices, which will then get into a bubble and burst. And we've already seen some of that in the stock market. I think that 2 is correct, and I would have them do that in March and June, and then wait 6 months. And we're close. If they did that, you're at 275 for the Fed funds rate. That's close to neutral. I'd be 3 to 3.5 is neutral. Other people, can go around that, but we're close to it. And you wait 6 months and then decide what to do. So I think they did exactly the right thing.
You get to 2 3/4. They say 2.8 or roughly thereabouts is the neutral rate. What do you make of the fact that the Fed voting members seem, if you do a scatter diagram of them, there are 6 who say 3 rate hikes next year, 5 who say 2, 4 who say what? I don't know what it is. So it's a very spread out curve of these governors. Does Chairman Powell have some cat herding to do?
Well, I don't think so. I think, if you take the highs and the lows and average, you get there. The biggest reason for this is no one knows what their neutral rate is. There's no science to it, so you have your own opinion, and you don't have to determine that. All you have to determine, which I think they have, is that we are below the neutral rate. We don't know what the high end is yet, and data and so forth will help us that. But if you know you're below, which the majority of the people of the dots said, you get to somewhere, and maybe even a little cautiously. I'm a 3 to 3.5 neutral rate guy, but I live with 275 and wait for 6 months, and not a rush. And you may not wait. I'm just saying you put that into your plan and you let data help you get there.
Let's talk about bank stocks.
The biggest risk we have is asset prices inflating. It's not inflation, and we know that an accommodating monetary policy inflates assets. So we got to get to neutral.